Hey everyone, welcome back to FX Smart, the place where smart traders grow smarter. If you're new here, make sure to hit that subscribe button and give this video a like if you find value in it. Today, I'm breaking down my personal day-to-day strategy, one that's been backtested thousands of times, and every single month I've tested it, it's been consistently profitable in the long term. This is the exact strategy one used in my own trading, and trust me, it works. The core of this strategy revolves around supply and demand. Demand is the start of a strong move upward. Supply is the start of a strong move downward. The idea is simple. You want to buy from demand zones and sell from supply zones, basically where institutional buying and selling is taking place. You know where the big bank boys are entering. Now, finding these levels is extremely easy. You just find the candle before a strong move and mark the low to the high of that candle. Then you simply wait for price to come back to that zone, enter your position, and go make some money. But here's the problem. Let's say on this chart we see 3 different demand zones, one here, and one here. So, which one do we actually use? If you don't know how to answer that, it could be the difference between a winning trade and a losing one. Going back to our example, we had 3 different demand zones. Zones 1 and 2 are fake demand zones meant to trap traders into entering too early, where they actually become liquidity, helping price reach the real zone. Zone 3, which is where price finally reverses. Now you might be thinking, okay, cool. So just pick the lowest zone because it has the highest chance of going up, right? Well, not exactly. While lower prices are often better, the lowest zone isn't always the best. Here's another example, 2 zones. If we waited for price to hit the lower zone, we would have missed the trade entirely. Price came down to zone 1 and reversed from there. So, how do we figure out which zones to trust? The answer, inducement. If you Google the word inducement, you'll find it means a thing that persuades or influences someone to do something. If we can find inducement on our charts, it increases the probability of identifying the strongest zone. The easiest way to spot inducement is through liquidity. The simplest form of liquidity? Just equal highs or equal lows. Whenever there are equal lows, there are naturally tons of stop losses below them. And the market is designed to take out those stop losses before it makes the real move up. So let's go back to this example. We have 2 demand zones. At zone 1, price consolidated before the move and created equal highs and equal lows. That means there's a lot of resting liquidity below that zone. Traders will enter here thinking it's a strong demand and place stop losses just below. Price might make a small move up, but then it'll break that inducement zone to grab the liquidity and head to the real zone, zone 2. But it's not always this easy to identify. Sometimes you need more tools. Another way to find the strongest zone is using breaks of structure. In this example, zone 2 had so much strength it broke the previous high, meaning it had serious institutional buying power. That makes it a strong zone. But what if we flip the script? Here, zone 2 failed to break structure, while zone 1, despite being higher, had the strength to break the previous high. So in this case, zone 1 is the stronger demand zone, and that's where you'd want to enter. The third trick? Fair value gaps. A fair value gap is a 3-candle formation where price spikes fast in one direction and leaves a gap with no wicks. That gap is an untested zone, and price will want to return there before moving away. Let's use it. Here are 2 demand zones. So, which one do we choose? If you look closely, there's a fair value gap just above zone 2. And like I said, price is attracted to these gaps. To reach that gap, price will have to break through zone 1. So, we can eliminate zone 1 as the strong zone. Now we have our formula. Look for inducement zones created by equal highs, lows. Identify zones that broke structure. Inducement zones that are linked to fair value gaps. Combine all of these and you'll increase your chances of finding the best setups. Now, back to our example. This strategy works on all time frames, but I personally love using it on the 1-hour or daily charts as these supply and demand zones are more reliable. So here, we've got a clear uptrend. Price is making higher highs and higher lows. In an uptrend, we only look for demand zones. We see strong moves from these 3 areas, zones 1, 2, and 3. But not all of them are valid. Let's break it down. Zone 1? Eliminate it. Why? There's a fair value gap above zone 2. So price will likely want to break zone 1 to reach that. That leaves zones 2 and 3. You might think zone 3 is the one, especially since there's another fair value gap below it. But if we examine the chart, we'll see that Zone 3 did not break the previous high. Zone 2 did. So Zone 2 is the stronger demand. We wait for price to return, enter on the touch, stop loss below the zone, take profit at the recent high, and boom, another winning trade. Let's look at another one. This time we're in a downtrend, so we look for supply zones. I see 2 supply zones right away. Both zones broke previous structure, so that checks out. But now look at Zone 2. It formed equal highs before the drop, meaning liquidity. Plus, there's a fair value gap above Zone 1. So we choose Zone 1. Watch what price does. It hesitates at Zone 2, the inducement zone, then grabs the liquidity above the equal highs and drops from Zone 1. We enter short, stop loss above the zone, take profit at the lows, another perfect trade. Let's do one last final example. Here we have a downtrend. Since we're in a downtrend, we'll look for areas of supply, right? When I look at this, I see areas of supply right here, 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 and here. So we have a total of 4 areas of supply. But which one do we choose? All of them created a break of structure, so we're good in that regard. Now, when first looking at this, I see something very interesting. We see equal highs at this area of supply. So we can instantly remove Zone 1, as price will naturally want to take out this easy liquidity at the equal highs. And in order to do that, it would have to break through Zone 1. Zone 2 is an inducement zone. Lots of traders will enter here thinking it's the correct zone. But like I said before, there are equal highs here too. And since it's an inducement zone, it'll add even more liquidity. So we can remove Zone 2 as well. That leaves us with 2 zones. Which one do you think it is? If you guessed Zone 3, you would be absolutely wrong because once again, there are equal highs here. This creates natural liquidity, making Zone 3 yet another inducement zone. So now we know Zone 4 is the real zone. Let's see what price does. It breaks through Zone 1, instantly heading to Zone 2, the inducement zone. It hesitates there, then proceeds to grab all the liquidity, giving it fuel to head higher. It then goes to Zone 3, grabs even more liquidity, and finally moves to the real zone, Zone 4. We enter a short trade, set our stop loss above the supply zone, set our take profit at the low, watch the trade play out, and we get another winning trade. Liquidity, break of structure, and fair value gaps. Implement this in your trading and watch your trading balance grow. So there you go. That's how you use liquidity, breaks of structure, and fair value gaps to truly master supply and demand trading. If you found this video helpful, make sure to give it a thumbs up, subscribe to the channel, and turn on the notification bell so you never miss an upload. We've got a lot more powerful content coming your way. And hey, if you're serious about leveling up your trading skills, make sure to check out the Smart Money playlist right here on the channel. We've uploaded dozens of in-depth videos breaking down these concepts even further, with real examples, advanced setups, and step-by-step strategies you can start applying in your trades right now. Whether you're a beginner or an experienced trader, there's something in there for everyone. Thanks for watching FX Smart, and I'll see you in the next video.